Right now, some Australians earning a genuinely decent income are paying $0 of income tax. Not through anything illegal, not through some offshore scheme, through completely legal mechanisms built directly into the tax system that most people never learn how to actually use. I'm going through exactly how this works, the real thresholds involved, and why it's more achievable than most people assume, and also exactly where it stops working. Let's get into it. Quick reminder, I'm not your accountant. Everything in this video is general information about how the tax system works, not a personal recommendation for your specific situation. Some of this applies more easily to some people than others, and I'll be upfront about that throughout. Let's start with the number everyone thinks they already know, but usually gets slightly wrong. Number 1, the tax-free threshold itself, and why the number most people quote is actually incomplete. Everyone knows the headline figure, $18,200. Earn under that, pay no tax. But here's what most people miss. That's not actually the true point where tax starts kicking in for most working Australians. There's a separate mechanism called the Low Income Tax Offset, or LITO, which reduces your tax bill further, on top of the tax-free threshold itself. LITO provides up to $700 in tax offset for lower income earners, phasing out gradually as income rises. Combined with the tax-free threshold, this pushes the real effective point where an Australian resident starts paying any net tax at all up to roughly $22,866 for this financial year, notably higher than the $18,200 figure everyone quotes. This matters more than it sounds like it should, because a lot of people doing part-time work, casual work, or running a very small side income specifically underestimate how much they can earn before tax genuinely applies. If you're a student, someone re-entering the workforce part-time, or someone deliberately keeping income low for a specific reason, knowing the real effective threshold, not just the headline number, actually matters for planning. Number 2, using superannuation contributions to legally reduce taxable income, sometimes right down towards zero for people in specific circumstances. Concessional super contributions, salary sacrifice or personal deductible contributions are taxed at just 15% inside your super fund, instead of your normal marginal tax rate. For someone earning a moderate income, salary sacrificing a meaningful portion into super each year directly reduces their taxable income for the year, which combined with the tax-free threshold and LITO can bring their effective tax bill down dramatically, sometimes close to zero, depending on exactly how much they contribute and what their base income looks like. There's also the carry-forward rule I've covered in a previous video. If your total super balance is under $500,000, you can use unused concessional cap space from the past 5 years, potentially allowing a genuinely large one-off contribution in a single year. Someone with a big one-off income event, selling an asset, a bonus, an inheritance-linked windfall, can, in the right circumstances, offset a substantial chunk of that year's taxable income this way, legally. This strategy obviously locks money away inside super until retirement, so it's not a free lunch. It's a genuine trade-off between accessible cash now and reduced tax now in exchange for long-term retirement savings. But it's a completely legitimate ATO endorsed part of how the system is designed to work. Number 3, and this is where a genuinely large number of Australians achieve an effective zero tax outcome without necessarily even realizing it's happening. The Seniors and Pensioners Tax Offset, or SAPTO. For pension-age Australians, SAPTO can reduce tax owing to zero on a meaningfully higher income than the standard tax-free threshold would otherwise allow. Combined with the pension itself and typical retirement income levels, a large number of full-rate pensioners simply never generate a tax bill at all because SAPTO absorbs it entirely up to a certain income level. This is a specific example of the tax system being deliberately designed this way. SAPTO exists precisely because policymakers wanted a large portion of the retired population living primarily off the pension to have effectively no income tax obligation, rather than requiring pensioners to navigate a full tax return process for a liability that would be reduced to nothing anyway. Number 4, and this is genuinely one of the more surprising mechanisms in the entire system, franking credits, and how they can turn into an actual cash refund, not just a reduction in tax owed. When an Australian company pays tax on its profits and then distributes a dividend to shareholders, that dividend often comes franked, meaning it carries a credit for the tax the company already paid. If your personal marginal tax rate is lower than the company tax rate the dividend was taxed at, you get the difference back as a refund, not just a reduced bill, an actual cash payment from the ATO. Here's where this becomes genuinely powerful for someone in a low-income situation. If your taxable income sits below the tax-free threshold, and you hold Australian shares paying fully franked dividends, you can potentially receive the entire franking credit back as a cash refund on top of paying zero tax on the dividend income itself. For retirees living off a combination of the pension and a share portfolio, or for anyone with genuinely low taxable income who's built up Australian share investments, this mechanism alone can mean receiving thousands of dollars back from the ATO purely from franking credits with zero tax paid. This is one of the more debated features of the Australian tax system, precisely because of how effective it is. It's been the subject of political controversy in the past over whether it should continue in its current form for people who pay no tax at all. As of now, it remains part of the system, and it's completely legal to use. And number 5, the honest limitation, because every strategy in this video has a ceiling, and pretending otherwise would be misleading. All of these mechanisms are genuinely most powerful and easiest to combine into an effective zero tax outcome for people with either genuinely low income, people at or near retirement age, or people with a specific one-off circumstance like a large super carry-forward opportunity. For a standard full-time employee on an average or above average salary with no unusual circumstances, these strategies typically reduce tax owed meaningfully. They don't usually bring it to literally zero, and anyone suggesting a simple universal formula to get any income down to zero tax is oversimplifying a system that has genuine limits by design. The tax-free threshold and LITO combination has a hard ceiling. Super contributions have annual caps, even with carry forward included. SAPTO only applies at pension age, with its own income thresholds beyond which it shades out. Franking credit refunds only work at their full strength when your other taxable income is genuinely low. The honest takeaway is this: these aren't loopholes in the sense of exploiting a flaw in the system. They're deliberate features, built by policymakers for specific groups and specific circumstances. Low-income earners, retirees, and people using super the way it was designed to be used. Understanding them properly means understanding who they're genuinely built for, not assuming they're a universal formula anyone can apply, regardless of their actual situation. 5 legal mechanisms. A higher effective tax-free threshold than most people realize, super contributions taxed concessionally, SAPTO, for pension-age Australians, franking credit refunds, and an honest look at exactly where all of this stops working. None of it requires anything hidden or aggressive. It's the tax system working precisely as intended for the people it was actually designed for. Quick reminder, I'm not your accountant. This is general information, not personal advice. Whether any of these genuinely apply to your specific situation depends heavily on your income, age, and circumstances, so it's worth a real conversation with a tax professional if you think you're close to any of these thresholds. If this helped, hit subscribe. I break down how the Australian tax system actually works, not just the headline numbers. See you in the next one.